Everybody, this is Jim at SP500chart.com. It's after the close on January 8th, 2013. We're going to use some time-honored techniques to try to understand these modern markets. And before we do so, as always, I got to read this. The website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. You need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, this was another day where we see some selling pressure. Then we have this little lazy attempt at a late day. Well, I would say a late day, but from late morning on, this little move here. Looks like it wants to move up just a little bit, but you know what this looks like to me? By the way, it's interesting that this move that we have today is at the exact same pitch as the move that we had for 3 days. So I think that's kind of interesting. And where we looked at finish drawing my line here. You know where I'm going with this, I bet. Where we looked at this sort of a funny, what some people have called a typhoon flag, which I kind of like the sound of that, because that's really what it is. You got this big move up, and then it's like there's just still this. Everybody feels like there's something at their back, that this flag, instead of drooping, which should produce a bullish result, is going up, which really shows the market doesn't have enough strength to really move things up, anywhere near where they'd been going before at that rate. But when you have that slight ascending flag, that shows that there's still enough buyers to barely move the markets up just a little bit. But as long as that's the case, eventually buyers are going to either lose interest or sellers are going to gain interest. And I think that's what happened with our move yesterday at the open. We opened below this support line, tested it as typical after a break, and that gave resistance. Then we started to sell back down, came back up, looked like wanted to back test it again, but couldn't get the steam to do it. And today we saw selling pressure right off the bat. Then we have our mid-morning, and mid-morning looks to me like a bear flag. And it's not. And none of these things right now are of horrific consequence, because we're looking at a 5-minute chart. If we were looking at a daily chart and this is what we were seeing, I would say, well, we may be in for a number of months of selling pressure. But instead, we're looking at a 5-minute chart, which means we may be looking for a day or so of selling pressure based upon this little pattern. The other thing that's interesting to note, let's draw a line under these two bottoms. Let's make it another color. I don't see anything red, so we'll make it red. And we'll create a parallel line. And wouldn't you know it, gee, as luck would have it, isn't that amazing? How this random walk, as many people still believe the markets are, sure has this ability to do some things that don't look so random. So here we are, guys. Now it looks like we're in a descending channel. We have the same rules that would apply to this descending channel as to this ascending channel, and that is we got to take out this top resistance line, and once we do, that's likely going to signify the end of this descending pattern. Now, here I think this is a bear flag. Interesting to note that we came up to this line, sold off, tagged this little bottom line, then came up again. So that means tomorrow, one of two things is likely to happen. We either gap up, break out this line, in which case I would be on a definite heads up for a back test. Or, and I think this is more likely, this acts as a bear flag, and tomorrow we see a day that is probably going to be pretty much down for the most part. And if that's the case, we could be looking for that move, as I've been sort of expecting, down to the 1440s. If we extend this line here, you can see what I'm kind of looking at. I'm expecting a move to take the markets back, take the S&P back to the mid 14 to the low 1440s. And if it can recover there and then take out this line, then that might be signifying that we are in the formation of a really large inverted head and shoulders. And if that's the case, then this high that we had late last week would be would probably mark the end of the full development of the head. It's not a perfect pattern. I thought this might be the neckline, but if it is, we had a very short-lived right shoulder. But I still think this will be a technically important line, a technically significant line. That's why I'm expecting the low 1440s to hold. So guys, there's your video for January 8th, 2013. Again, just in a nutshell, if this line breaks, we're probably going to head down to tag this red line again. If this red line were to break, then I would expect an eventual back test of this red line. At any rate, I think the chart's working pretty good for us. Let's look for this, see if this plays out as a bear flag. And if we get down into those low 1440s, that might be a good spot to pick some to start a long position on the notion that this may very well be an inverse head and shoulders pattern in development. And that there's some other charts that look pretty bullish too, guys. So let's see if that's what we get. Appreciate you taking time out of your day to watch the video. And I want to thank you if you're a subscriber. You get to see this video on the afternoon of the 8th of January. If you're not a subscriber, you're gonna have to wait 3 days to see this. And if you are seeing this, and it is, say the week of what is the next week? The week of the 14th. I want you to ask yourself, would this information have been useful to you a week ago? If so, come over to sp500chart.com and see how inexpensive it is to sign up for these daily technical analysis updates of the S&P 500. Thanks for watching. Take care.